Welcome to HouseLux Estate, your trusted guide to real estate investment. We are here to provide you with comprehensive and reliable insights into the complex world of property markets. Our mission is to empower you to make informed decisions and maximize your returns. Today, we're delving into an exciting realm of real estate investing, REITs. As we navigate this journey together, you'll learn how to leverage these unique investment vehicles for long-term wealth creation. So, stay tuned as today, we unravel the process of investing in REITs. Before investing, understanding what REITs are is crucial. So what are REITs? Simply put, REITs, or real estate investment trusts, are companies that own, operate, or finance income-generating real estate. They're a bit like mutual funds, but instead of holding a portfolio of stocks or bonds, they hold a portfolio of properties. REITs are a way for everyday investors to invest in large-scale income-producing real estate. This could include a range of property types such as apartments, warehouses, offices, shopping centers, or hotels. Essentially, they allow you to buy shares in commercial real estate portfolios that, ordinarily, only the wealthiest individuals or institutions could afford. So why consider REITs for long-term wealth creation? Well, there are several benefits to keep in mind. The first is the potential for regular income. REITs are required by law to distribute at least 90% of their taxable income to shareholders each year in the form of dividends. This can provide a steady stream of income, particularly appealing for retirement or income-focused investors. Secondly, there's the potential for capital appreciation. Like any investment, the price of REIT shares can go up over time. If you buy low and sell high, you stand to make a profit. But remember, the value of your investment can go down as well as up, so it's important to consider the risks. The third benefit is diversification. Real estate often behaves differently than other types of investments. By including REITs in your portfolio, you can spread your risk across different types of assets, which can help smooth out returns over time. Lastly, investing in REITs is straightforward. You can buy and sell shares of publicly traded REITs just like you would any other stock, through a brokerage account, an individual retirement account, or even a robo-advisor. Now that we know what REITs are, it's time to dive into the process of investing. Stay tuned as we delve into the world of real estate investing with REITs in the next segment. Investing in REIs begins with thorough research. Let's dive right into it. Picture research as the compass guiding your investment journey. The path to long-term wealth through REITs is not a random walk, but a strategic march. And research is the strategy's backbone. A well-informed investor is a prepared investor, and preparation, as we know, is the mother of success. So where do you begin? Look at the vast landscape of REITs available in the market, each with its own unique set of properties and sectors. It could be residential, commercial, retail, or even specialized sectors like data centers and healthcare facilities. Each sector carries different risks and potential for growth. And understanding these intricacies is the first step towards making an informed decision. Next, dive into the performance of various REITs. What has been their track record? How have they weathered economic downturns? What is their dividend yield? Remember, the past may not predict the future, but it certainly paints a picture. But how do you find this information? There are numerous resources available to aid your research. Financial news platforms, investment blogs, and even the REIT's own websites provide a wealth of information. Financial reports, investor presentations, and earnings calls transcripts are treasure troves of data waiting to be unearthed. And let's not forget about analyst reports. They provide insights into the health and prospects of REITs, often backed by solid research. While researching, remember to keep an eye on the management team. A strong, experienced management can navigate through the choppy waters of economic cycles, maximizing investor returns along the way. Lastly, don't forget to look at the REIT's financial health. A REIT with a strong balance sheet can weather financial storms and continue to pay out dividends, a critical aspect of long-term wealth creation. Armed with research, we are ready for the next step. Research lays the groundwork for smart, informed decisions. With a thorough understanding of various REITs, their performance, and potential for growth, you are now ready to choose the right REIT for you. Now, let's move on to the next step. Choosing the right REIT is a combination of knowledge and intuition. Once you've done your research and have a good understanding of what REITs are, the next step is to choose the right one for you. This choice is crucial, as it can significantly impact your long-term wealth. Let's start with the dividend yield. This is the ratio of a company's annual dividend compared to its share price. It's an important factor because it shows how much cash flow you're getting for every dollar invested. A high dividend yield can be attractive, but remember, it's not the only thing to consider. Sometimes a high dividend yield can be a sign of distress, so it's important to look beyond this number and consider other factors as well. Another key factor is the REIT's management. You want to invest in a REIT that has a strong, experienced management team. A good management team will have a clear strategy and vision for the future, and they'll make decisions that maximize shareholder value. Look for a management team that has a proven track record of success and a deep understanding of the real estate market. Lastly, consider the types of properties the REIT invests in. There are different types of REITs, such as retail, office, residential, and industrial. Each type has its own set of risks and rewards. For example, retail REITs might be affected by the rise of online shopping, while residential REITs might be influenced by housing market trends. It's important to choose a REIT that invests in a type of property that aligns with your investment goals and risk tolerance. Choosing the right REIT is no small task. It requires careful consideration and a deep understanding of your own investment goals. But with the right research and the right approach, you can find a REIT that's a good fit for you and can help you build long-term wealth. After choosing a REIT, we move to the actual investment process. Remember, investing should always be a thoughtful and calculated decision, so take your time, do your research, and make the choice that's right for you. Investing in a REIT is as simple as buying shares. Yes, you heard it right. The process is straightforward. Once you've done your research and chosen a REIT that aligns with your investment goals, the next step is purchasing shares. And this is done through a brokerage account. Let's break it down. A brokerage account is essentially a financial account that allows you to buy and sell a variety of investments, including stocks, bonds, mutual funds, and yes, REITs. There are many online brokerage platforms available today, each with its own unique features and benefits. So, it's important to choose one that suits your needs and preferences. Once your brokerage account is set up, buying shares in a REIT is a breeze. Just like purchasing shares of any company, you'll specify the number of shares you want to buy and place your order. And voila! You're now part of the real estate investing world. Now let's talk about diversification. It's a concept that's crucial to understand when investing in REITs. Diversification is essentially spreading your investments across different assets to reduce risk. Think of it as not putting all your eggs in one basket. When it comes to REIT investing, diversification can mean investing in multiple REITs that own different types of properties in various locations. This can help mitigate the risks associated with a particular sector or geographical location. For instance, if you invest solely in a REIT that owns office buildings and there's a downturn in the office space market, your investment could take a hit. But if you also have investments in REITs that own residential properties, shopping centers, or data centers, you're better protected against that risk. Remember, the goal of investing in REITs is not just about earning income from dividends, it's also about capital appreciation over the long term. So diversification is key to achieving that balance between risk and reward. With the shares purchased, you're officially a REIT investor. Congratulations! You're now on the path to building long-term wealth through real estate investing. And remember, patience is key. Investing is a marathon, not a sprint, so sit back, relax, and let your investments do the work. Investing in REITs is a journey towards long-term wealth. To travel this journey, we began by understanding what REITs are: unique investment vehicles that allow you to invest in real estate in a way similar to stocks. They offer the opportunity to diversify your portfolio and earn dividends without the need to buy, manage, or finance any property yourself. We then moved on to research, highlighting the importance of delving into the specifics of a potential REIT. This included looking at the type of properties they invest in, their management team, financial performance, and more. Understanding these factors helps you make an informed decision and mitigate risk. Next, we discussed choosing a REIT, emphasizing that it's not just about the numbers. It's about understanding the market trends, the property types that resonate with you, and the geographic regions where the REIT operates. All these factors can influence the success of your investment. Finally, we talked about the actual process of investing in a REIT. We discussed various methods, such as buying shares directly on an exchange or investing through a mutual fund or ETF. We also touched upon the importance of a long-term perspective when investing in REITs, as real estate markets can be cyclical. Remember, the journey to wealth is not a sprint, but a marathon. Thanks for joining us on House Lux Estate. Don't forget to subscribe for more insightful content.